Hey guys, let me know if you can hear me, if you can see me. Just a quick confirmations before we dive any further. Hello, Chaitanya.
Hey, what's good, guys?
How, how are you doing? Okay, I'm going to also reach out to Ken and notify the communities as always. Okay, I need to have this tab open. Yes, clearly, Jake. Thank you for the confirmation as always. Do we wait for Ken or do we shall? Oh, do we dive in? Let's dive in, and Ken will join us eventually. Probably the first thing that I would like to talk to you guys about is the euro US dollar, which looks very interesting. Let me just share the screen. And I think the Ken was actually taking some trades on Euro USD, but not short. He was sharing it on his story. He was taking longs, very scalp trades. Share the screen window, and here we go. Andrew, can you confirm if you can see my screen?
Hold on. Yep. Clear.
Perfect, thank you. Okay, so guys, we were talking about the Euro USD on Monday. At that time, we were somewhere here, I think, in this zone on small time frames. And I told you you can go back and rewatch it. I told you that the sentiment is still overall and majority is bearish. I'm talking about the retail sentiment. So what was I saying, and what I then reshared on my story is that I will be looking for some spikes towards the upside, which eventually happens. And I also highlighted this zone, 1.163 to 1.165, where I will be looking for potential reversals. Because if it's not going to happen here, then probably the second zone might be 1.173, right? So if we are not going to reverse here, I don't think that we will reverse anywhere between this range. So right now, and I would love to enter those shorts, I still believe that the US dollar can present some bullish momentum, hopefully. Let me also check. Yeah. So what I'll be looking for now, especially on 4-hour chart, is some sort of a candlestick pattern for me to enter a trade. Something similar to, I don't know, probably something like this or like this. So also this could be it, but I would need to see, I can draw it, of course. Let me just delete everyone. Okay, let me go back. Perfect. So if we're going to get a candle with a really big shadow, and then after this candle, we'll get a bearish candle, then I'll be probably entering the Euro USD shorts. Right now, even though we reached the level, even though we reached the zone, I don't feel like it's reversing at all. So I'll be looking for at least the candlestick formation. I don't like it on 1-hour chart, 4-hour chart. We're still pretty bullish. If I'm not mistaken, Ken was taking longs somewhere around here, and he already closed them as we approach the 1.163 zone. So yeah, he's already messaging me. Perfect. So he's joining us today as well. Let me invite him, and I'll then briefly just check the chat. Okay. So bearish and yeah, some sort of a bearish candlestick pattern that would be lovely on a 4-hour time frame, especially once we get the one with the big shadow and then the bearish one, just for confirmation. I don't like entering the positions when the market just reach out the level that I think it's important. I need to see confirmation. As I was saying, something like this would be very handy, or then even better, something like this actually would be awesome. So big shadow and then bearish candle. So yeah, I wouldn't mind to enter Euro USD if that actually happens. Let me just get rid of it so I can then Okay, perfect. The same probably goes for GBP/USD. I'm waiting if we are going to reach the level 1.338, basically this zone. If we zoom out, it's a pretty important one. You can see that the market reacted already several times. So I think it's still a very valid resistance. If we do, then I'll be looking for the same as on the Euro USD. To be honest, I don't think it's going to happen now, especially with that bullish momentum. Is the can already here? Let me see. Not yet. Okay, before Ken joins, do you guys have any other markets than Euro GBP, sorry, Euro USD and GBP USD that you would like to discuss? Because I'm looking for this one, actually, then the Australian dollar Swiss franc, but I don't want to talk about this pair on every live stream, so kind of still the same, still looking for the shorts. I don't know what else on Australian dollar would I be trading at this moment, because I don't believe that much in euro anymore. I don't believe that much in pound anymore. So probably the Australian dollar, US dollar might be a good opportunity if we actually get that bullish momentum from the dollar. Kind of reached the level of 0.65, also important. Actually, I like this one, guys. I like this one towards the downside. Targeting back the 0.64 in the long run. Do I have a wrong keyboard? Yeah, it's about 100 pips. It's not bad at all.
Yeah, it's not bad.
So yeah, probably the second one after the Euro USD that I'd be watching is also Australian dollar, US dollar. I mean, the best for me would be if the price actually reaches, again, the golden zone at the same time, the open 653, as I like to open on 3s and 8s. Those levels are especially interested to me. So that would be probably the second pair I'd be looking for in upcoming days. But I think the Euro USD might get there first. Australian dollar. Oh, didn't check the chat. Australian dollar, Japanese yen. Yeah, I think that might be also an option, especially with the recent bullish momentum on Japanese yen. I don't think I have an analysis for Australian dollar, Japanese yen, because this pair kinda it's not my favorite, but pretty similar developments to Australian dollar and US dollar. We reached 96. We bounced. Actually, looks like we are bouncing. So I think that with the Australian dollar, Japanese yen, could be the very same scenario. We've got this zone, which is pretty important. Resistance. Yeah. If I'd be opening any trades here, I would be also selling, guys. I would be also selling. Doesn't look like it from higher time frames, because still kind of bullish, but then we broke the structure, created new lower low. If this is a new lower high, then I think the shorts may be valid. Don't trade indexes, Nasdaq, okay, and gold, of course. Oh, Ken is just waiting in the room, so let's invite him as well. Didn't see that. And then gold. Let's see what gold does.
Yo, what's good?
Hello, Ken. Can you hear us?
Hey guys, how you doing? Yeah, good. You guys?
Not bad, not bad.
Good.
All good.
Wicked.
Oh, I was just waiting for you with the Euro USD, because if I'm not mistaken, I saw your story. You was taking some longs today,
Yeah.
weren't you?
Yeah, man. I had to park my ego to the side, because obviously I was screaming potential upside this week for dollar. I mean,
Yeah.
it could still happen. You never know. But yeah, things have turned a little bit bearish for the dollar. It's been a couple of developments since Monday, since our stream. So yeah, I decided to get in some longs. It lined up sort of technically as well. So yeah, capitalize near term, just some long.
Do you think there's still a chance for reversal? Because I think if we hold up on this zone, actually 1.163 to 1.165, or get some sort of a reversal here,
Yeah,
are you still in the mid-term for dollar bulls, or did you
yeah.
just change your view on it?
I think as you say, that sort of area I'm keeping an eye on as well. 1650, I think is quite a big area to try and break down again. Um, it's, you know what it is right now. It's one of those weird. I've been talking to quite a few people, just some of my guys in the city as well, and there's a lot of mixed fundamentals right now. And obviously, the root cause of why things are so volatile is because of the man Trump. You
Yeah.
know, we've got all this uncertainty. We've got now. It's weird because, you know, the FOMC have recently. There's been a couple of members that have come out over the course of sort of Monday evening, yesterday, today, who are just calling now, saying that it seems appropriate for rate cuts. And you know, I don't know how you can just change your tone in the space of a week or so. And for me, it comes down to Trump. And then obviously Trump's now, we're looking for his new puppet to come in and someone's going to replace Powell. It's a circus, man. So like to be honest, it actually annoys me, but you know, because it annoys me, but you know, we just have to go with it and trade the market narratives. And right now people are just thinking, oh, there's all this uncertainty. We're going to have this dovish FOMC now. So that's what's up.
Yeah, that's true.
Yeah.
That's true. Might change in the matter of few days.
Yeah.
Completely.
But it's crazy, like how, I mean, if anyone's going to be able to get away with it, it's Trump. But it's just a mad world we live in. Like how you could just do that. You know, in all these years, for so many years, we've had an independent, it's not we, but the United States has an independent central bank. And then this guy thinks he's got massive cojones, comes in and thinks he can just change shit up, like change history, basically, in a not so good way, because it's supposed to be independent for a reason, you know, separate from the government. You know, at the end of the day, the government's borrowing money from the FOMC as well. Like
That's true.
It's just crazy, man. I just don't see how he can get away with it. And this is why people are talking about, look, let's move away from the dollar. Let's get another reserve currency of the world, because with this guy in power, it's just ludicrous. There's so much instability and volatility.
That's true. That's true. Yeah.
So
I mean, yeah, you're right about Trump being kind of outsider in a politics scene, where basically, as you said, he does what he wants. So kind of dangerous. That
it is actually. Yeah. So yeah, for now, I think if you ask me, you know, I still see there's a chance. You know, there is a chance, but we have to just go with the flow. If that euro breaks down 116, then it's probably just going to be a continuation, you know, and a dollar weakness.
Yeah, it might be. What I was just saying to chat, basically, if I'll see in this zone, because then if we break above like significantly, if we close somewhere here, then I don't see a reason why wouldn't we continuing towards 1.175 or even higher than that. But if we will be having some sort of a candlestick formation with, I don't know, bigger shadow at the top and then a bearish candle following that, I think still it's a possibility that we will then reverse and will be continuing toward the downside, somewhere towards 1.148, 1.145. But I wouldn't just enter based on that level, like just we reached the level. We need some sort of a confirmation. So if that's going to be enough bearish momentum, yeah, I would be probably in. But without it, it's kind of dangerous.
Definitely. I mean, the thing is as well, Jake, you know, when you look on that weekly, if you look on your weekly chart a moment,
Yeah, sure.
Like it's, you know, it's debatable, you know, it's arguable that structure's still somewhat holding, you know, in terms of that uptrend.
That's true.
You know, we've just
kind of because the higher low is this one, and then we've got this one here. So
exactly.
on a weekly time frame, we're still bullish though. Yeah, that's true.
Yeah, on the on the weekly view there. I mean, if we get to bullish closure this week, then I mean that just confirms it, and we're going to go for a higher high.
Yeah. Also didn't see this weekly candle with the shadow. Didn't see that. Okay. Yeah, you're making me like rethink the whole situation.
No, man, honestly, these are the most volatile times as a trader I've had it in like a long time. You know, it's crazy right now.
Yeah, you're right. You're right. Well, guys, yeah, I'll be still watching this level, just the zone. If we break significantly above it, just forget it. And if we don't, I'll probably just update you on Insta Story if I'll see the candlestick formation that I need for it. So yeah, can kind of just now ruin my scenario with good points. Okay, no worries. If you don't mind, I'll stop sharing. I'll leave the screen for you.
Okay, yeah,
And
let me just pull this up.
we can dive in.
Side. Yep. Okay, let me share my screen. Okay.
This market's like what?
All right, guys. Yeah.
Yeah.
Okay, let me just zoom in a little bit. Okay, let's minimize this. Okay.
Yeah, crazy times, chat.
FOMC. I just want to pull up a couple of comments. Kashkari, just so you guys know what I'm talking about. News. Boom. And then FOMC daily rate.
He had speech yesterday, or
yeah.
Okay.
So we got daily. Who else? I think there's one more as well. Yeah, so we've got daily saying time is nearing for rate cuts, may need more than 2. Daily, previously, she's been quite hawkish. Now she's sort of saying that we're nearing for cuts, not even plural, may need more than 2. You know, you got to remember as well, guys, ahead of the NFP, markets had, remember the word that I was using, that we nuked rate cut bets because if we had higher inflation and Powell, this is what I mean. You know, this is what I mean. Just freaking last week, Powell said that he basically said, we're not getting rate cuts anytime soon. We're not rushing to cut rates because of inflation. So my goodness, there is, in my eyes, someone has been in this game for a long freaking time. You, FOMC, have zero credibility, you know, and if I think that, so everyone else must think it as well. And it's no reason why dollar's getting kicked in the freaking balls, because you have zero credibility from your central bank. They're supposed to be, you know, ensuring that there's price stability, economic stability, and then you're changing your tone within the space of days is ludicrous. Now everyone's calling for cuts. So anyway, this is why dollar's losing ground. We had Kashkari as well. Okay, this was today, suggesting that there could be 2 cuts this year due to current slowdown in the US economy. It's just bizarre. It's so bizarre. But okay. And, you know, we have to remember as well, this is why, like, when you look at the latest GDP reading, we had quite a decent bounce back for the United States. Look at the advanced GDP reading. This is important. It jumped up to 3%. You know, it's a big recovery from the contraction that we had. You know, a lot of this contraction was some uncertainty heading into the tariffs, so on and so forth. But then we had a big bounce back of 3% quarter on quarter. This is not just month for month. This is a whole quarter. And now these guys are changing their tone so drastically, you know, cuts with an S. So this is definitely a Trump situation, you know, and I don't know, that needs to be investigated, to be honest. It's not acceptable. I'm not having it. I'm not having it. Anyway, so obviously we've sort of just gone over dollar there. There's still a chance like this pushes to the upside, but we failed to hold here. Okay. I said, watch this retest, didn't I? I was screaming about this retest. We are making a hold here at 98.50. And now it's just sort of given way. All right. We've given way. If we pull up the 4-hour here, you can sort of see that we're just dropping now, you know, a bit of a head and shoulders there. And it's sort of the flip side to the euro, where euro, we have the inverse head and shoulders. This is one of the reasons I was eyeing up those, you know, those longs today. Well, I took those longs today. You know, we had this inverse head and shoulders, left shoulder, head, right shoulder. There was a chance that this was going to head to the downside, but we staged the rebound. Obviously, this was helped by those dovish comments that we've had from both Daly and Kashkari. Big push to the upside, and then obviously a breakout. Okay, you can sort of see, you guys know I like my bull flags. You can see bull flag, breakout, and longs into this 1650 area. Okay, so as Jake said, guys, I think let's keep an eye here. All right, it's a decent zone all the way there. You can see that. If this breaks down, obviously it's going to fly. Okay, the way it's heading right now is looking good. All right, it's looking for further upside. So that's that. All right, we'll reconvene on euro, but it looks bullish to me at present. Okay, GU on the other hand, I'd be a little bit more cautious about. Okay, because right now, obviously, yep, daily's bullish, fair, but we are still in a bearish structure. Okay, the daily right now in terms of daily candlestick is bullish, but I'm saying the daily structure is still bearish because we've got lower highs, lower lows, bam, bam, bam. But if I am open-minded in a minute and I just sort of see things, this could be a way of sort of bottoming out, you know, like a W, big W here, where we come up to this massive neckline here, and then obviously it could just shoot to the north. Okay, that's very possible. Now, it's 100% priced in tomorrow. We've got the rate cuts from the Bank of England, 25 basis points. Okay, I'm not expecting any surprises there. It just depends how dovish is it, how many members are calling for that cut, how unanimous were they. I think this is going to be pretty unanimous. I don't think we're going to see any shocks there. Why GBP could strengthen tomorrow is because, you know, inflation's higher in the UK. So they may just want to be like, look, let's just cut for now and let's observe this impact of this cut or this effect of the cut on the economy before we decide anymore. So we're not committing to more until we see how the economy deals with this cut. So that sort of language, them not committing to more, is going to provide potential upside for GBP. The way GBP sells off tomorrow is if they're like, we see inflation dropping quite drastically. We see the economy heading further to the downside. We see a large economic downturn, all that sort of commentary there. So keep an eye on growth forecast, inflation forecast. But otherwise, if they still see sticky inflation for the foreseeable future, they're likely to just one and done cut, observe. Because remember, cutting rates is inflationary. Okay, remember that I was screaming about that last stream. So longs anyway, here for GU right now, and I expect that continuation tomorrow. To be honest with you, I feel like obviously on the 4 hour we broke structure here. You know, lower highs, lower lows. We're just sort of consolidating, and now like really and truly, once we do this, it's going to come up to 35.80. So tomorrow I'd potentially look at longs on a break of 34s, get comfortable by 34s, and then look at longs. You know, right now there isn't a setup for me because we're quite extended to the upside. So I'll just be sitting and observing Bank of England first, and then be looking at longs. Okay, so potential longs for GU, potential longs for EU. I will jump over to Aussie. I was bearish Aussie. I am bearish the Australian dollar, but obviously, you know, this is the dollar weakness coming into play right now, pushing to the upside. So I was interested in these potential shorts, but the fact that we're doing this now it's off the cards. It's off my watch list. AED, USD. I'm just going to jump over. I haven't analyzed any of these yet, so I'm just going to take a look. The GP Aussie. This might be one worth cooking, guys. So, you know, as I just explained there with GBP, okay, I've taken a break from sort of GP Aussie for a while, but just because it's been sort of consolidating. I haven't liked the way it's been moving, and the fundamentals as well haven't really been the best for me. I'm just tidying this up a minute. Now, the reason why I might look at this, remember how we spoke about Australian dollar, the Aussie economy? We had lower, the labor market's getting soft, the inflation's cooling. We're nearing those rate cuts. Remember, we've got their decision, the RBA's decisions next week, I believe, the 12th of August. So, and then we've got obviously the Bank of England. Yep, they're cutting fine, but they may not be committing to a lot of cuts. So this is interesting potentially here for GP longs, GP Aussie longs. All right. I like the fact that we're trying to bottom out here at this sort of 205 area. So 205.50 is the area of resistance. We could potentially look at this as trying to double bottom out here. All right. Obviously, we've got all the neckline of resistance up there on the weekly. The daily, obviously, yes, we've had this structure to the downside, lower highs, lower lows, bam, bam. But it may be similar to GU. You see where GU is bottoming out. Where was it on a 4 hour? You see like this sort of consolidation pattern. Signs of like, you know, there's exhaustion from this bearish structure. I think we've got a similar thing going on with GBP Aussie there in terms of that exhaustion, that consolidation starting to happen. So look, this consolidation here, okay, potentially loading up to try and break out of this structure, okay, where we've been printing lower highs, lower lows. So I'm looking at it, I'm eyeing it. 4 hours, not screaming entry for now, okay. We're just ranging, as you guys can see. But if we get comfortable and go for a breakout and retest of this zone, I'm going to be interested in INO's longs. Okay, so potentially we can start a sort of a bullish structure there. Jake, I know you don't trade GP Aussie, but I know you've been in the past, you've been a pound bull. I know you've been obviously an Aussie bear for a while. What's your stance on this? Your thoughts?
No, actually, on the last week on the live stream, when you was on a holiday, I was actually saying that GBP Australian dollar might be good because I'm buying everything against Australian dollar. Not everything, but I just like to sell Australian dollar. So I mentioned, I don't know if that was Monday or Wednesday, but I'm 100% sure I said it, that GBP Australian dollar could be also a great opportunity, because I was saying at that time that GDP in euro went not bad, not good, and also inflation was a little bit sketchy. So I said, okay, I'm going to forgot about euro, then I'm going with pound, and I said, that the pound and Australian dollar might be it. So definitely on it with you. I was actually looking for, before you joined in today, I was actually looking for pairs that I would buy against the Australian dollar. I was considering the Australian dollar, US dollar, but then again, as we then started talking about the US dollar, I'm not kind of feeling good about it anymore. So pound probably would be better. Yeah. I also think that the consolidation right now, there are higher odds that we will break above than below, regarding just what's happening in with RBA and with Bank of England. I'm still in the favor of pound against the Australian dollar. So yeah.
Awesome. Yeah, agreed, man. Yeah, just riding out this consolidation for now. I think we should get some clearer breakout opportunities post tomorrow. Apart from that, obviously, there's not really much else that I'm involved in right now. Yeah, that's sort of it.
What do you think about Euro GBP? Because I also wanted to talk about Euro Australian dollar, which is now getting bullish momentum. So I'm thinking also to getting back into my favorite pair. So I wanted to
Euro
ask
Aussie,
you
you
about
mean?
this. Yeah, Euro Aussie, but also Euro Pound, because Euro Pound looks like we are just creating a double top. And at the same time, if the pound is going to get the bullish momentum, might also be good on shorts. I'm not convinced that we are basically reversing, because we are very close to creating new higher high, but we are kind of still holding on that 0.873 level, which is basically like double top formation.
Yeah, I see. Yeah, it's definitely a lot of resistance there. 87, 40, 50.
If you go to 4 hour here, actually,
Yeah, see the 4 hour.
Yeah, basically that what I meant. Like we have one top on that. We didn't create actually new high, so I was thinking that those two, the building the V pattern.
Yeah,
So maybe.
yeah, I see what you mean. I may see it from a different perspective at the moment. The only reason being is I don't know what happened here. Something must have happened at the open. I can't remember what this was, but something's obviously happened. Some volatility for this candlestick.
I think that was
almost
the
look at
euro.
this. What's that? Sorry.
I think it was euro news on this.
Yeah, this just looks a bit alien in the sense of it just obviously whatever news has caused this, I don't know, but I think that's sort of alien, and it's sort of out of line of obviously this overall structure. I think we can almost sort of in my opinion, potentially disregard this and still, like at the moment, okay, unless I'm proven otherwise, right now, structure I think is still intact to the upside. And the 4 hour for me at present is just sort of still holding high, low, and potentially in the process of this high. Let's see. Okay, let's see what happens here. Okay, let's see what happens here. If we grind this down, obviously it's going to fly. But like, I don't know. I feel like structure still, when I look at this like this still looks bullish to me. Boom, 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 boom. Like this is just, I don't know. I think obviously that was some sort of
I
news.
can't recall what was the news, but I'm pretty sure that was news from Europe that caused this outbreak toward the downside.
Oh, hold tight. This was the trade deal. Okay, so it was not seen as bullish for euro. It was seen bullish for dollar. This was the US EU trade deal. Okay.
Yeah, it might be.
That's what it was. Now, yeah, I just think this is just noise. And I just feel like we're just going to carry on and respect structure. I don't know. Let's see. I'm going to trade what I see, but I just here it seems like we're intact. I don't know.
Yeah, kind of. I was just thinking about it because the current risks are mostly within the trade war. And when comparing euro and pound, I was thinking that the pound already has a closed deal with Trump. So I don't think the Trump is going to go after UK. At least I'm hoping for it. So then probably if they're going to get into it with Europe, then probably it might get hard again. Yeah, just kind of was comparing the risks on both currencies, and I thought that the pound might be a little bit better on it. But yeah, true is that the structure technically looks kind of bullish though.
It does. But let me throw this at you, Jake. Because a lot of the time you and I are aligned, so we're gonna have to mix things up a little bit here. But look, UK right now, obviously we've got low growth and prices are very high, but inflation in the eurozone is in check. You know, it's in check. They've got shit under control, but the UK hasn't. So it's a little bit, in my eyes, a little bit more stable going on in the eurozone at present.
Yeah, that's true, but that's also why I'm thinking about the ECB delivering the continuous cut rates sooner than pound. With the stable inflation. I mean, that's also on the other hand, if the GDP in UK is right now on the heavy fire, then might also convince the board members to go for the cuts a little bit earlier. But then inflation is 3.2, I think.
3.6 in the UK.
3.6.
Yeah.
Yeah. Well, then I think the ECB is going to be the first one who's going to then, once at least things are a little bit settled with the trade war, is going to be the first one who might deliver another rate cut and go with the second trade of rate cut release.
Yeah. Okay. No, that's very valid. Now let me throw something back at you. Right? Listen up.
Sure.
So obviously I get what you're saying, and that makes total sense, 100%. Okay. If rates are higher in one place, of course, it's naturally we should see that strength of that respective currency. But then we also have to not overlook the fact that there's higher economic risks. So investors, obviously, yes, they're yield seeking, but at the same time, if there's more risk in that economy faltering or slowing down, they're more likely to go to the place that's stable, even if it's offering lower yields. And the eurozone for me right now is that place in comparison to UK. If we've got a whole stagflation, freaking hyperinflation potentially going on in the UK, where inflation just keeps rising, as an investor, I would rather put my money somewhere else. Where it's more safe and sound.
It also makes a lot of sense, though. Yeah, I mean, from both of them, the euro is definitely more stable, though.
Yeah. Treads.
Okay. You've got also valid points, mate.
Yeah. Someone's saying this is giving Bloomberg vibes. Bloomberg TV vibes.
No, I mean, these discussions are good because mostly we are aligned with Ken, fundamentally speaking. So, I mean, before we dive into this live stream and before Ken joined, I was still thinking about the Euro USD, having the same scenario in my mind, and can talk me out of it. So yeah, it's good, I think.
Yeah, man. Awesome. I'm just quickly checking. I know you've probably gone over gold.
Actually, I did not, but I'm still bullish though.
Yeah, I'm still bullish.
If the dollar is going to get a hit, then gold is going to explode towards the upside.
Yeah, I think so. It's really messy here, but I was hoping. See, I said in the live stream, I wanted it to come back down to sort of 34, 35, 33, 35 area, but we didn't get that pull back. And obviously, it remains pretty intact right now. I said, obviously, keep an eye on this zone here at 33.60. I'll just remove this a minute. So we've now got sort of ourselves quite comfortable above this zone, and we're holding. And obviously now we're sort of structured to the north, albeit a little bit rangy, but we are trying to break out, it seems. Daily's a bit messy, these sort of daily candlesticks here. It's not full on commitment, but maybe we're just trying to grind this down. It looks like, what's the 1 hour doing? I don't know. I don't like this price action, actually, to be honest with you. I don't like it. It just seems a bit, there isn't a lot of commitment at present. But, I mean, if this holds, we should carry on and push to the upside. I just personally, I wouldn't jump into this. I mean, unless I saw, we go to the 30-minute. Okay, I missed this today. I've been quite busy, but I potentially would have taken some longs on this liquidity sweep, took out the Asian range low. And this is like a classic intraday trade for me. And then running up to the Asian range high. And then potentially even, I would have, and yesterday, I missed this yesterday as well. But these are my trades. Okay. So finding those liquidity sweeps, especially when we're in a bullish market, taking out the Asian range low and then get an entry, I would have entered here. And this would have been an intraday trade, but also a swing trade for me. Swing entry here for a run up to here. But as an intraday, I'm targeting Asian range high, but then I'm also having runners for swings up to the next major zones. But I've missed both.
Do you use any indicators for the sessions?
Yeah, this one just what's this one called? It's called I'll show you here. It's Asian range by Nico 948. Just marks up the Asian range basically.
So basically, once the Asian session is marked, then you are looking for the liquidity sweep. So if it breaks below, then you are looking for the reversals?
Yeah. So when we're in a bullish market, obviously this has been in a bullish market, you can see we're structured to the upside, generally speaking. Yeah, I'm looking for that low, the Asian range low to be taken out. And usually with gold, it's going to happen anytime between 12 London time, 12 to 2:30 London time. So that's about 7 to 9:30 Eastern time that we get that sweep coming into play. Look, it happens same time. Look, 12:30 here. And then again here, all right, similar sort of time.
Yeah.
So yeah, that's what I'm looking out for. Obviously, if we're in a bearish market, I'm looking for the high to be taken out for the shorts. I mean, it doesn't happen every time, obviously, but that's the A+ setup for me when we get it. We don't always get it, but that's what I'm looking for.
Okay.
Yeah, when we do my strategy, I'll go through this in detail and get.
Yeah, sure. I was just interested in it.
But yeah. So yeah, but it looks like we're going to carry on pushing higher anyway. But I'm annoyed actually because I've missed these two entries, which is a bit of a pain because this does
unfortunate.
Look like it's gonna go.
That would be good trades though.
Yeah, and this looks like it's going to go. It's going to go.
Someone also mentioned USD Japanese yen. I'm just going to take a quick look.
Yeah, go on, Jake. I'll hand the screen back to you. Let me stop sharing.
I don't think I have specific. Yeah, let me check on the trading view first. I don't think I have a specific trade with the dollar right now. We're still below 150, so I'm expecting to get bearish on the USD Japanese yen, especially if the dollar is going to get hit.
Yeah.
But not a specific technical setup right here. No, not yet. Okay. Angel, do you want to take over the indexes? And I'll just briefly take a look at other markets. If you do have chat any other markets that you would like us to discuss, just write them down into the chat. And till that happens, I'll leave the screen for Angel if you want to.
Yeah, of course.
We both, Angel, we both got our hats on backwards today. You...
Yes, sir. Hold on, let me just look for the window here. All right, this is the one. Can you guys see my screen?
Yes, sir.
All right. So pretty much same waters as Monday because we are still trending inside the range, inside this leg here. So we are just trading and retracing back into the 70% as what we were mentioning. Yesterday we had a good trade because we were trading inside the 50% retracement. And we swept Asia high as we were discussing, and we have a good push lower, right? This was yesterday, but again, we're still here. So pretty much we might see a lot of consolidation inside this area. So we might seek for longs and short while we're getting deeper into the retracement area. So pretty much you gotta see what's going on with the sessions. Doing a lot of can trades. This is what we love to do. Liquidity sweep with Asia. But yeah, so right now there's nothing much. We finally see some push higher to get deeper into this retracement. So we might finally feel this 4-hour gap here on ES. So today we had pretty much the same as yesterday, as you guys can see here. We swept London lows inside the gap on the higher time frame, and you can see price pretty much sweeps the liquidity and goes targeting the opposite liquidity. So nothing have changed. We're still kind of retracing back into here. So I'll be looking again for the price to reject from this gap from the 4-hour time frame. And while we are getting there, I'll be looking for longs again until we trade into that gap to continue lower. Keeping in mind, we are still bullish on the hard time frame. We are trading all-time highs. So if the price wants to just push higher and continue higher, okay, it's pretty much something that can make sense because we are bullish, right? So that's pretty much for SP 500. If we go to Dow Jones, we're still trading inside the daily gap here after we swept the lows, and we have this leg, right? This is a 50% retracement. So we want to see what's going to happen here for the rest of the week. We don't have any more news. So it's going to be pretty much choppy and sloppy price action. So you guys gotta be aware of that. So what I will want to see from here is a clear displacement lower that can give a retracement to continue the lower prices, right? From here on the Dow Jones. For Nasdaq, still the same. We're trading into the 50% retracement. We had a nice push yesterday as well. For shorts, we are now trading back into the range, rejecting this hourly gap. We might reach the 4-hour gap as well, which is the 70% retracement. So you want to see what's going to happen here, because we can either look for longs from where we are right now. If we might reject here, or we're going to use this gap as resistance to continue higher. Yeah, so we can either retrace back from this gap on the 4-hour or use it as resistance for higher prices. So that's pretty much the handset that I have for the rest of the week.
Okay, looks good. Perfect. Thank you for sharing. I don't trade indexes, so hopefully you got the insights, guys. Maybe in the future I'll get into it. Basically, before we end up the stream, I wanted to ask you, Ken, about. I'm watching it just right now. I'm going to share the screen, if you don't mind, Angel. And
yeah, of course.
I'm
You can go ahead.
Someone suggested it in the chat, and then because I was analyzing Australian dollar, US dollar, and then someone suggested the Australian dollar, Japanese yen. So I think it might be also a good opportunity for the bearish momentum, or for shorts. Actually, on the 4-hour, we broke out the structure, the option structure, created new lower low. And now we're basically bouncing. This is the Japanese yen, right? The news from the Bank of Japan. But then we are now bouncing from 50% of Fibonacci. At the same time, we didn't break above 96 level. And I kind of like what I see here. Would you, or do you think the Australian Japanese yen could be also a good opportunity towards the downside?
Yeah, definitely. I like it. I like it. I think so. Obviously, those cuts are coming obviously from the RBA. The hikes are coming again from BOJ. So there's going to be a nice divergence there. With the slowdown in Australia, safe haven flows into yen. I like it. I was just a bit disappointed that not disappointed, but we've just sort of maybe I like to look on the 4 hour for structure, and that most recent high there threw me off. But I think it will probably just fall back in line. So obviously we had this. You see to the
You
left.
mean this one?
Yeah, this one here. Yeah, but I think because I was looking at that previous one as a lower high, then a lower low, and then obviously we pulled all the way back up to that 50% fib that you got marked up. But it's still intact. I like it. We've had a nice bearish rejection there, bearish engulfing following that little evening star. So this should just be a continuation.
Yeah, I think so. I mean, there's a lot of things above the current price. I mean, even if I'd be selling it, I mean, you've got the golden zone, which is the 50-60% Fibonacci. You've got also level 96. Then there are a few fair value gaps, of course. So I think there's a couple of elements towards the upside that the market might, or it might be difficult for market to break above. So
agreed. I like it.
Yeah, 50 pips is not much actually as a stop loss, not for as a swing trader. It's not much. So I kind of like this scenario.
It's good. We sort of triple top there as well, more or less.
I'm sorry.
We triple top there as well. It's 3 peaks there, which is nice. So yeah, it looks pretty damn good, to be honest.
I mean, these 3 tops, right?
Yeah, exactly. So it does look good.
The 3 drives pattern. Yeah,
I'm sorry.
Awesome. That's the 3 drives pattern as well, like the 3 top. It's when the price tries 3 times to get higher and just struggles to get there. And we have a good displacement on the lows, so it actually looks really good.
Yeah, I don't know who suggested it. Can I go that far into chat? I would love to know. Google Org said it. Okay, yeah. He's the usual. Yeah, nice catch, Google Log actually.
Yeah,
nice catch. Yeah, I'll be most definitely looking for this pair as well as the GBP USD, but I kind of like what's happening here.
Definitely.
Okay, guys. I think we've covered it. The Wednesday is usually like repeating the Monday mostly. If we find something new, like you told me with the US dollar, that kind of threw me off. But thank you for that. And thank you also, Angel, for your analysis.
Yeah,
and I don't think that you have any other markets they would like to discuss or do.
Not on my side. All good.
Perfect. So thank you guys in the chat for being here. We appreciate you. And again, we'll see you on a Monday. Probably I'm going to do one more account review live stream this week. I'll keep you updated on my Instagram, but if not, we'll see you again with Ken and Angel on Monday.
Awesome.
Yes, sir.
Okay, guys. Thank you so much. Enjoy the rest of your day.
See you all then next Monday. Take care, guys.
Bye.
Bye-bye.